Sometimes Forex trading is a wild and woolly place to be. That's why Hugh's here, to pose your questions to Walter, the naked Forex guy. Hugh's got questions, and Walter's got the answers. Here at the Truth About FX podcast.
Hey, Walter, how's it going?
Pretty good. How are you, Hugh?
Oh, very good. Today's question is, I think it's basically two questions. So the first one is it right to say that your style could be categorized as a long-term breakout style of trading? And when you do see a setup like a Kangaroo tail or a big shadow, and it looks pretty sweet, do you stack the odds for you? I guess this person is asking, meaning like, do you risk more, or maybe do you pyramid or something like that?
Right, for better risk to reward. Right. Okay. Yeah. So actually, I wouldn't say that.
Okay.
I would actually say it's more of a, like, most of my trades would probably be classified as a swing trading. So yeah. So kind of looking at support and resistance as potential spots to take a counter market move, almost like saying the market's been going up, it hits this resistance, so I sell, or the market's been going down and it hits some support, so I buy. So it's really more of a swing trading. I mean, it depends on the system. So if you're looking at a big shadow or a kangaroo tail, you can certainly trade them as trend continuation patterns, but they normally won't have all of the characteristics that I'm looking for. And obviously these are all posted in the book and in the show notes for this, the Naked Forex book, and in the show notes for this video, I can post two books for you: the Kangaroo Tail and the Big Shadow, since these are the systems that this person actually is asking about. So yeah, so you guys can get those books if you want. But basically, most of my trades are swing trades, and then some of them would be considered trend continuation, or like waiting for a retracement. And then you get a signal, and so it's sort of like trend has retraced, and then it throws a signal, and then it's like trend on again, that kind of thing. Or breakout. So, for example, the last kiss trade is a breakout. It's just a normal breakout with confirmation, and that's basically all it is. So that's essentially, So I mean, you can apply these sort of naked patterns in different ways, as a trend continuation pattern, as a swing pattern, or as a breakout. But most of mine would be classified as a swing trade. And then the other one that I really like, and this one was highlighted by one of my friends, my trading students, he came up with the term the pinch, and I thought it was awesome. And he did this webinar for us where he showed us, he's an amazing trader. He's like this number one ranked guy on whatever, I can't remember the Signals platform that he's on, but he's really, really good. And what's interesting is he trades like rarely, but he's got like an 80-something win rate. And he talks about the pinch, which is basically, if you think about it, the market breaks through a support and resistance area, then it just comes back and tags it again and gives you a nice big shadow or something. So it's kind of like my last kiss, but he's looking for these more with strong, move through a support or resistance area, and then it just comes back and gives it that little sort of last touch on that area, on that zone from the other side. So if it's, for example, if it's a sell trade, it breaks through support and then it goes down there for a while, comes back up, tags it again, gives you a nice signal on that retouch, and then you just go from there. And those can be so good, and I really love taking those. So those would be, I suppose, classified as trend continuation or breakout, however you want to call it. But yeah, so I like those as well. But I would say the vast majority of the trades that I take are simply swing trades, and they're meant to be where you're capturing that that fractal high or that swing point, that local high, local low. That's what they're really meant to capture. So that would be the way that I would answer that one. That's a great question.
I see. Cool. So in the case of like the pinch, when it's a sweet setup, do you risk more, or do you like stack or anything like that?
Right. Yeah. So that's the second part of the question. No, I don't really do that. What I do is, well, this is probably something that may interest people. What I do is I set my risk depending on the characteristics of the system. So I'll give you an example. Let's say that I'm trading big shadows, and I'm trading them as reversals. So basically swing trades on big shadows. Well, I've noticed that with the big shadow, somewhere around 77% of the time you can hit it right, okay? And this is going to vary with every trader. Some guys aren't going to be able to make the big shadow work, but for me it's around 77% of the time it's going to work. So what I'll do is I'll plug in my numbers when I do a back test of a system. I'll plug in my numbers and go, all right, so this is a 77% win rate. Let's say it's got a 1.5 reward to risk ratio. So for every dollar you're risking, you're making $1.50. So it's not like excessive, right? And that's going to be the case usually when you have a high win rate. You're usually going to have a lower reward to risk ratio, but it's still got a positive expectancy. Now then what I'll do is I'll go, okay, what kind of drawdown am I going to say that if I experience this drawdown, I'm going to be really upset. I'm going to probably stop trading. I'm going to question myself. I'm going to wonder if this is ever going to work for me. I'm going to think that big shadows don't work anymore. What's that number? And for most traders, it's probably around 15 to 30%. I know a lot of traders say that they can sit through a 25 or a 30 or a 40% drawdown, but most traders can't. And if you've got $200,000 and you lose $40,000 in your trading account, that's a 20% drawdown. $40,000 is a lot to a lot of people, so most people can't handle that. So what I'll do is I will adjust my risk depending on what kind of drawdown I don't want to have. So if I've got 77% win rate, a 1.5 to 1 reward to risk ratio, and I don't want to experience a 20% drawdown, then I will adjust my risk so that I know, okay, given these parameters of my system, I am highly unlikely to hit that 20% drawdown. And so I'll give you guys in the show notes to this episode a link where you can go to my website, and it's got this calculator where you can plug all that stuff in and you can play around with the numbers. And there's a video there above the calculator that shows you how to use it so you can see that. But the important thing, I guess, is that I don't adjust risk based on, this has got a really high win rate, so I'm going to risk more, or this trade looks particularly good, so I want to risk more. I adjust risk based on what I'm trying to avoid, which is I'm trying to avoid freaking out during a drawdown. And so I look at how do I avoid that really nasty drawdown, and really that comes down to statistics and understanding that. And so if you can get a handle on that, then you're really ahead of the game, because most traders, that's where they fall apart, is they get into the drawdown, and that's when they start to do funny things. They say the market's changed, or they say the system doesn't work, or they say, I'm not cut out for this, or this doesn't work anymore and I'm just going to quit, or whatever, I got to add an indicator, or you know what I mean? Like, that's where we fall apart as traders. Like, that's the psychological, that's the most difficult thing. So the way I do is I work backwards and I say, okay, how am I going to avoid that? And the way that you do that is by simply adjusting your risk so that you don't hit that uncle point. So hopefully that makes sense. And I think that if you're like nodding your head right now going, yeah, that makes sense, check out the calculator, plug your numbers in, and work it out so that you don't hit that spot where you get stuck with your trading, so that this is something that you can do long term. I would really encourage you to do that.
Okay, yeah, that's awesome. I really appreciate that. That's something that not a lot of people talk about. So thanks for sharing that with us.
Yep. Thanks, Hugh.